Hey, this is Shaktipriyan. I'm going to present how I make investment in Nasdaq from India. Right? Yes, we are starting finally the video. So why Nasdaq 100 index, right? It gives us international exposure. It gives us exposure to Google, Nvidia, Microsoft, Apple, Amazon, and Meta. So out of the Nasdaq 100 index, just these six companies cover 62% of the index. So this provides a more geographical diversification. So we are not just restricted to a specific single geo-based portfolio right now. At least two is better than one, right? And personally, I believe these companies will have a long-term growth. They will keep on growing with varieties of things happening in the world. Unless there is a backslash for American companies across the world, especially the tech companies, right? They will continue to grow. And another advantage over having a Nasdaq 100 in our portfolio is that it's backed in USD, whereas the typical assets in India, either equity or debt, they are typically backed by INR, right? So they are in terms of INR, and whereas Nasdaq 100 is in terms of USD. If you take gold is also indirectly in USD, right? And if you compare the growth of Nasdaq 100 over last decade, so it has grown like 19% over last 10 years. The compounded annual growth rate is 19%. And then there is an INR growth rate, which is around, let's say, about 4%. Adding that in, you get a 23% phenomenal growth rate. Right? Unless you're lucky and you got hold of some large multi-bagger stock, um, reaching this 23% in an index fund, nothing such index exists other than Nasdaq 100. So it's growth oriented, it's more volatile, but long term growth is what you are looking for. This is the index which you have to invest in. And yeah, so the past performance will never indicate what will happen in future, right? Nobody knows. And so downside of this is that it's too take concentric index. As I said earlier, 62% is just covered by six companies, right? And it's a less diversified index compared to, let's say, S&P 500 or any other index, right? So this is and also the index is too top heavy. Out of 100 companies, just six of them cover 62%. So what about the next, right? So if you see here, the first six companies, you see here the first six companies cover 62%, which is Google, Nvidia, Microsoft, Apple, Amazon, and Meta, right? Which I know everybody would have touched upon, right? Nobody there, like all these companies, we have used their products in some way or another. And if we add the next six also in the line, which will just add three more percentage, not much. Say for example, Tesla, Netflix, uh, and other companies listed here are also have some way or another we have been exposed to, right? So growth of this company is either be it a cloud or AI technologies that's upcoming and growing on. So they will keep growing. The index is though too top heavy. This company in the historical run, they have given phenomenal growth compared to anything else. So how do we buy Nasdaq 100, right? So so these are the easiest way, which is mutual fund, where we can go and buy them. In the past, I bought these two mutual funds mentioned here. One was this Kotak one, which is fund of fund, which was buying iShares Nasdaq 100 ETF. There was another from ICICI where there's a Nasdaq 100 index fund, which was buying the direct stocks into the fund, right? But we cannot go and buy these mutual funds today because there is an industry level limit which was applied. Though this is like very old limits, right? This was set when during the financial crisis of 2008. So these limits were set, and it was not revised yet. So the AMCs are not accepting the funds, like a new inflow into these mutual funds, which will be much easier for a simple like a user who is not a simple investor who is not like very active in this investing space, trying to learn a lot of things, and more of a passive investor, right? So I would say, like classify myself as a passive investor who doesn't do any active trading and so on, right? So my goal is long term wealth, right? It's not you go and buy and sell and make money, right? So you buy and hold forever till a point when you really need money, decades away, right? You want to do something with the loss of it. So here, if you see, the first option, the simplest option is mutual fund that's not available anymore. What is the next option, right? So there are ETFs also listed on Indian stock exchanges. There is one Motilal Oswal Nasdaq 100 ETF is available. But the challenge for this ETF is also exists, right? So this ETF also owned by the AMCs. They cannot go and buy more Nasdaq 100 due to the the limitation that the industry has hit, right? So what happens in this case is that the stocks not really reflect this particular ETF doesn't really reflect the underlying index. So this is trading at premium, and it's not getting created, and people are just buying it without this understanding. So what next, right? So the two options are gone. The mutual fund option is gone, and the stock ETF option is also gone. So what next, right? So the next option that's available is this LRS scheme, where we can send money out of India and invest it in the stock, right? And I will cover what I'm doing at this point. So let's talk about LRS, right? LRS is liberalized remittance scheme, where RBA allows individual residents can send up to $250,000 per year, per financial year, right? So for investment and other set of permitted use cases where it's allowed to be sent out. So each person can like send up to this limit, but there is a challenge here, right? So which is if you send this money out, if you cross this 10 lakhs limit, there is one TCS involved where government is taxing, doing a tax collection at source at 20%. So let's say you invested 10 lakhs, right? And you want to invest more in Nasdaq in a same year, you want to go and put the next 2 lakhs. So you have to pay 40,000 for the tax as a to the government, which will again we'll see how we can claim them and things like that later slides. So essentially, this money can be used to invest in any of these foreign stocks, ETFs, or overseas mutual fund. Where here, if you see, once you send the money out using these LRS, and you can start investing. So what next, right? So we know how we can send money, what is the limit there, and so on. So we can open accounts with various Indian and international brokerage firms, using which we can go and buy the, let's say, either buy the direct stock or even the Nasdaq index in Nasdaq, right? But the challenge there is more paperwork. Like we have to go and fill up a lot of things. There is a US charge of 30% withholding tax on dividends. So Nasdaq 100 is not primarily a dividend centric index. Um, Even a minuscule dividend that comes out of it, there is a lot of paperwork, and especially if the ticket size is large, there will be a lot of money getting, let's say, tax collected at US, and then you have to go and claim that in India and so on. And so there is like more overhead and more processes involved. If you want to directly go buy either stock in US or go and buy ETFs in US. And interestingly, I couldn't find a US ETF which are not uh, giving dividend, right? So all the ETF, there is a dividend, they are just giving the dividend out. They are not really reinvesting. So what I ended up doing was like I found a way in which I'm investing now. So now I'm buying up this XNAS from LSE, right? XNAS is X tracker ETF, which is tracking the Nasdaq 100 resource, Nasdaq 100 companies. Right? And LSE is where London Stock Exchange, where I'm buying these ETFs in London Stock Exchange. So if you see here, so why XNAS listed in LSE, right? So XNAS is Xtrackers Nasdaq 100 ETF. One is for accumulating. So essentially, it accumulates the. So when there is a dividend or paid out within the fund itself will go and buy additional stocks. So there is no dividend paid out to the investor. So this ETF just tracks this Nasdaq 100 index, and it the domicile of this fund is also interesting. It's in a country where the US has a reduced tax due to their treaty they have, and since it's an accumulating ETF, there is no ETF paid out, less paperwork for us, right? No dividend paid out because it's accumulating ETF, and again this is traded in USD in London Stock Exchange. We don't have to convert money multiple times, right? So you do one conversion from INR to USD, you take the same USD and go and buy it from London Stock Exchange. And yeah, by choosing this option, couple of benefits I see. One is that the reporting is slightly lower because there is no dividend coming out any year, right? So it will be always like you have to say that what are the foreign assets we are holding. We'll look at them what we have to declare and so on. And till we are so this is for a from my perspective, right? It's for a long term investment. We're not going to go and like let's say doing a trading on that, right? Day trade or buying and selling and selling and buying, right? So this is for a long term wealth creation. So building the wealth for long term generational wealth creation, right? So we'll go and invest the money into it and forget about it. Let the companies grow. Let the index grow, right? So that's a motivation of building the wealth, right? Building wealth is not like you build something, you accumulate something and then go and spend on that, right? So it's for very long term, large growth oriented, and let's say this money we are not dependent on anything kind of a thing, right? So we just want to grow the wealth. Building the wealth is the core goal here, right? So there is no sell for me, at least. I don't anticipate anything like that at this point. It's a long-term growth, right? So till I do a taxation, till I go and do some selling, there is no taxation involved. So there is no tax I have to pay to the Indian government. I don't even have to declare that in. Right? So interesting, right? So you have to go over say so many countries before I end up buying this stuff, right? So from India, I'm using this ICICI Direct Global, which is essentially a white labeled version of interactive brokers. So you go and sign up with ICICI Direct Global, and you get access to the interactive brokers. They're the ones who is actually executing the trades, right? They go and execute the trade, buy the ETFs and store it in your name in the corresponding stock markets and so on. Right? And UK is where I'm actually doing the purchase. I'm buying the ETF, XNAS ETF in London Stock Exchange, right, which is in UK and Ireland. So that's a country what I talked about earlier. Right? So the XNAS is domiciled in Ireland, which has a 15% withholding tax compared to let's say 30% if we are directly buying it from India. So there is a even if there is some minuscule dividend involved, since even that is reduced due to this reduced limit due to the treaty Ireland and US is having. So that is a benefit, and a lot of large number of funds are based out of Ireland for this particular reason. Even the Quatak, the fund of fund what I showed earlier, it is holding iShares that are domiciled in Ireland, right? So that's a model the fund house itself is employing for the fund of funds. And interestingly, the XNAS is the fund who's creating this ETF, right? It comes from a DWS group, which is based out of Frankfurt, and Xtrackers family of ETFs. A lot of ETFs are there in this Xtrackers, which is usually lesser price than their competitors, and this particular XNAS one has a high volume in the LSE as well. So yeah, so it's a the fund is getting managed from Germany. Fund is in Ireland, which is getting sold in UK. and I'm buying it from India, and this ETF is under the hood tracking the Nasdaq 100 index, right? So essentially, I'm buying all these Google, Amazon, all these top companies what we talked about, sitting from India, going for so many countries, and all these things happening electronically, right? So nothing, no hassle, no like. So there's a larger picture, right? So how the whole system operates here, right? So how do I? Okay, let's see. How do I go and buy Nasdaq, right? So it's a three-step process. Step one, I let's say get my salary credited to a salary account, and I transfer that into a investment account where I go and manage my investments. So essentially, part of the salary account upfront is split up into expenses and investment. Probably I can go over it in a different video with more details of how I do these things. Right. So here, if you go and invest the money into Nasdaq 100, there is a so there are like various asset classes I'm planning out in my portfolio. Right. There is a debt class and there's a gold, equity US and equity India. So each have its own ratios and the current ratio and the target asset allocation ratios. Right? So each month I do a rebalancing by buying more of what is less in this portfolio. Whatever has not performed well, I buy them more. So assuming that they will become better performing after time. And at the time, I will go and buy the one which are again not performing. Right? So for typically, right. So when there will be negative correlation among these assets. Some class goes up, the other one will come down. So Nasdaq 100 being in this one of the equity asset classes is there. It provides me this option to rebalance, including that gives me a more powerful way to rebalance things. Right? So sometimes what happens is FAIs go and sell in India, go and buy in US. Sometimes they go and sell it in US and come back, buy more things in India and so on. When all these things happen, this asset allocation will automatically go and reallocate funds towards things which are cheap and less funds towards things which are like valued more, right? So yeah, so I can go over this in detail and probably in a separate video. So from this slide, right, let's say I get a money, I get salary credited. I take a portion out of that for investment. From that, I take a portion out of that for Nasdaq, and then I go to the ICICI bank and go to fund transfer, and there is a money to world service that ICICI provides, which can be used to remit money outside of India. And typically, it's get credited on the same day, sometimes on the next day. So this essentially converts rupee into USD, right? So I go into log into my bank account, and from there I go to this fund transfer and I click on this money to world. Then there is a send money button there, right? So I go and click on that and move to the money to world. So there's a send money button there again. You have to go and click that, and which will take us over to whom we are sending the money. Just filling out all the details into it. In this case, I just said $100, and it gives me the USD to INR conversion rate and other charges, bank and government charging for this transaction. And there is some coupon code that's available for ICICI Direct customers where applying the coupon code. So some of these remittance service charge and like GST on top of that came down, and there's some reduction in the exchange as well. This was comparable to other services when I was checking with some of the more recent companies. This was this was still competitive to some level, but this was slightly premium is what I felt. But still, I had a trust with the bank and a relationship for let's say 15 years or more. So I just continued using the bank's way to send the money out, right? So just fill up the details. What is the amount you want to say? So you want to invest, let's say, $100 into this index fund, right? So you just say, okay, $100. Okay, it comes to 9,000 rupees something, and you go and fill up the details. You choose. So these are the reasons and comes under the LRS where what are the so these each of them will have some differing slightly differing rules, but the others is where the mutual fund comes in, and I'm choosing that, and I have to fill up more details on where this money is going, what I'm buying, and so on. And yeah, so the interactive brokers is where I'm sending the money to. So this is you have to add the receiver already, and I'm selecting that already available receiver, and then filling up the details. So here you have to fill up. There's a end user name which will be available in your account where you can find that numbers and add it in. Right? Just go and check box, check the check boxes and say next and do the payment. So the money will be transferred from INR to USD. It will take a while. It is not instantaneous like coming from a UPI experience, right? So it's still old world. It will go through a process. It will take time. Sometime Money to World will ask for some additional details or clarification and things like that. So you have to provide some inputs in or email or over the web interface, and then it process. So done, right? The step two is like the money sent out. Money sent from our INR bank account to a USD brokering account, right? So the broker, as I said, the interactive brokers opened by ICICI Global Direct, right? So the particular one, so the next step is to go and buy the ETF, right? So in this case, so I have to go to ICICI Direct login. I will show those screens. So usually it takes, let's say, usually if you start early in the day, the same day we can receive the money in the IBKR, and we can also go and buy the ETF on the same day. So it's not multi-day, multi-week effort, right? One day it should be able to pass through things. So then I typically go and look at what is the NAV value, what is the current market price, and so on. And one challenge I found there was the market data is delayed data by 15 minutes or so. So it's not real time. So it's more like still a guesswork of finding the discovering the price and buying it outright. So that happens, and this is how I go over it, right? I log into ICICI Direct. From the more I choose the global invest. There is a invest now button there. When I click on that, it takes us to the interactive brokers web interface. Here it says account name, what is uh, the buying power there, right? $21 is there in my account at this point. So where I can go and invest this $21 into buying fractional shares, which is not available in India, right? So here we can go and buy shares like zero point 0.1 shares and so on. So which is possible. Like you want to really do that, you can still do. And so there's a extractor, the DWS, what I said earlier. They also publish all the NAV values, how much asset is there, what is the TER. So the expense ratio is like 0.2%, which is on very, I think, lower side, right? But just an index fund, it's not a. So being a passive fund, I think the newer Nasdaq under tracking funds, there are some funds which also do like 0.14% and things like that. The more standard product that is there in the market was doing like 0.3%, which is higher than this one. I chose this because of I think there's a liquidity. It's available in USD in London Stock Exchange, right? So those are the two reasons: uh, liquidity and availability in USD. And the third reason is this the lower TER. So three reasons put together, I ended up choosing this particular XTAGR Nasdaq 100 ETF. So if you see here, yeah, so for the interface what I shown earlier, you can go and say, okay, I want to go and create a ticket to order, right? So you can go and say what is a buy price. So in this case, I've said zero point 0.1 shares I want to buy. I setting the closing price, which is C 57.43. I set the same price. I'm also previewing the value. So if you see, they say the commissions included, it becomes 1.99 to $4 USD is what the commission they are saying. So they are estimating 8.74 USD to buy zero point 0.1 share, right? Which is not really I would do. I will usually go for a higher ticket size, right? Yeah, so it has some additional things you can go and watch, like what other tickets you want to track and so on. So these are the three things that I have in my mind for buying Nasdaq 100. One is XNAS, which is what I'm currently investing into. Then this ANAU from AXA and CSNDX from iShares. So these are the iShares is the very old one. If you see the price itself, you can pay. The price itself will indicate how old they are, right? The larger the price, longer they stayed in the market. So ANAU is relatively newer, but it is even, I think it's the least priced, the TER is very low for ANAU. Whereas for XNAS, it is it's a balance, right? It's not it's between ANAU and CS and DX, and ANAU is also similar size as XNAS, but the volume availability in the market to trade is relatively lower than XNAS whenever I was checking at that. And again, XNAS, XNAS is available in LSE, and NAU is not available in LSE. So you have to go and open things in multiple stock exchanges. You have to buy if you want to really do that across the Europe, right? So it will, you have to end up doing that. But interestingly, all these three funds are based out of domiciled in Ireland. So they all carry the same the underlying withholding tax for dividends at 15%. And I think here the TER plays a crucial role. So, and volume, right? If you want to suddenly someday for emergency you want to sell, hope you have an emergency fund, and so lower the volume, it will be difficult to sell at a time and things like that. So, but XNAS was providing a decent volume is what I felt. But still, if you compare this against directly going and buying an Apple stock, this will be, that will be manifold the volume there. You cannot compare these things, right? ETF is still relatively young, and not everybody does it, so people go and buy the direct stocks, uh, and specific stocks, right? In this case, ETF is going and buying 101 companies under the wood. But if you buy specific stocks and you have conviction of uh, not diversification there, you can still do that. So yeah, so this is what I keep watching there and doing it, right. So what are the okay, so what are the cost involved here, right? So there is a conversion loss when you convert from USD to INR. There is a bank, you have to pay some ISP, like let's say there is a mid market rate with what Google shows, and then banks will say what is the buying rate and selling rate. Usually buying rate is higher, or having a like bank takes a cut out of it, right? Similarly, when we are selling as well, they will sell it lower than whatever the mid market rate would be. So it depends on the bank and time and so on, where this things are like which bank or which uh, foreign exchange trader you are like doing this conversion, that will have an impact. Let's say it can have 1% impact while we are converting the money, right? And then there is a government also takes GST charges. There is a currency conversion charge, and if the bank or the financial institution charges for the service, there is a GST of 18% on top of it. So the government takes money out of it, right? And there is another one government takes, which is this TCS. So we have to pay tax when we cross that 10 lakh limit, right? So if our investment ticket size is lesser than that, we don't have to worry about it. So TCS doesn't come into play in a year. But if investment ticket size is larger than that, whatever the amount it's larger, you have to pay 20% TCS for that. And so the earlier it used to be you have to go and claim that in income tax filing and so on. So we will see about this in the next slide, right? Okay, so so essentially these are the charges when we convert from USD to INR. And then there's a ETF buying cost. So there is a variation of NAV price versus the, the market price at that point. So I've seen it varying plus or minus 2%. Sometimes it was closer, sometimes it was far. So based on whether you want to buy it, fulfill the order immediately, you want to buy it now, or you're patient enough to wait longer, you can go for a lower bidding price and so on, right? So there is a this also depends on the direction in which it's going, whether it's Nasdaq is going up or going down during that period, right? And then there's this IBKR charges $4 for executing these orders. That's what I observed with my orders. So they charge $4 for each transaction, right? So if I go and buy for $400, right, I will easily lose 1% here as well. 1% is gone for the commission that we pay to the brokering agency, right? So in it, right, 1 to 3% we can the money is lost just to do this activity, right? So bank will take something, government will take something. While buying the ETF, the exchange and trading charges and other things, they will take some money. So essentially we based on how we efficiently we are doing this, we can easily incur 1 to 3% kind of a charge. But longer term, let's say you are investing for, let's say, 10 years, 20 years, very long term horizon, right? So this will be negligible compared to the performance that the underlying fund is yielding at this point in time. So over time it should become smaller, but still, so this is the cost that is involved, so which is the additional cost that is there. So one more cost is there is then when we go and sell these things, all these things will apply in reverse, right? So there will be even for that, out of the brokerage will we have to pay the brokerage and the stock exchanges where we are selling our stocks, and when you convert them back into the INR, IBK provides some support. I think few transaction like remittance in a month is free or something, but the rates I'm not sure how like efficient or how like I don't know whether they're charging premium or not when we are transferring back from a brokerage account into Indian account, right? So that I have to see in future. I don't know when I will see that, but let's see. And on the yeah, so ETF management cost, the underlying ETF themselves will go and manage. There's a management fee, right? So they'll charge this total expense ratio, which is different for different funds. What I said earlier. So XNAS is 0.2%, USD, and it's available in LSE, and it's trading at a higher volume. ANU is even lower TER, but the volume is low, and it is on a EBS, like I think in other stock exchange, not in LSE. CSNDX was, I think, was LSE, but it was at a higher management cost. TER is higher compared to the, but the volume is very this particular one trading in USD volume was lower, but the ones that are trading in British pound and like other currencies, they are relatively higher. But seems XNAS is a best balance at this point for me, where there is a volume, there is a price is lower, and there is a it's a easy availability in USD. And yeah, so coming back to this TCS part, right? So when like when we cross this limit, right? If we are crossing the 10 lakh limit in a year, this kicks in. So you have to pay 20% TCS for whatever the money you are investing up, like investing above this 10 lakh limit to the government. So earlier what happened was we had to go and climb this at the end of the year when you go and file the ITR, adjust it against our tax. Like we can essentially go for a tax refund and get it out from the government, right? It takes, let's say, a year or so. It's a long cycle. So over that period, the government takes just 20% of the investment we are trying to make like outside India. Right? In 2024 budget, government was proposing that employees, the salaried employees, can go and share more details to the companies, TCS, TDS, what they have paid out, and they will go and adjust that against their salary TDS. Right? So in 15 October 2024, this Form 12BAA was introduced, which was which we can use to go and declare to the company, saying that to the HR department, saying that I have invested this much of money, this is the TCS I have paid. They will adjust that against the next month's salary, and essentially you pay this money upfront to the government as a tax, and this amount we can adjust it against our salary over the like next month's, right? So they will include this in the tax computation, and the in-hand money what we will be taking out from the next month onwards will go up, right? So essentially, instead of the company taking the TDS out from the salary, whatever the TCS we have paid upfront for this investment, so that is adjusted against, and this is essentially I would say very good, where it is reducing or adjusting it upfront, right? So this gives us an opportunity, like this, what are the 20% government is taking upfront, it is normalized over the remaining months TDS and so on. But still, I think this is definitely a better move than what it was earlier. I wouldn't have ventured in like into, let's say, investing more than this amount, right? If government is taking 20% TCS on every investment we are making above this limit. So the other option in that case is that if you have more people in the house investing in their name, and like if you are going and like earners, right? So husband and wife working, and both of them, both their names, you can go and invest, and that easily doubles our limit at the family level, right? So that's one way of dealing with the, trying to avoid this limit earlier. But now this option was available. I just the additional overhead and like managing the OC investment in multiple names, right? So this is better to keep it in a singular name. Now we can have this TDS which we can claim upfront. The TCS what we paid is adjusted against the TDS, which is a good move from the government. So there's a form this was available. So this is that format I was talking about, right? It's 12B which is available in income tax website. So here if you see there's a details you have to fill out, and then there's this TCS section where we can fill out and provide and say what is the amount of tax collected, right? So once we provide this information, employer is bound to adjust this TCS against our TDS salary TDS, and so we will see increased inflow in our salary in the remaining months, right? So that's where this 12B fits in. And on the tax filing, right, there are two different I think 2-3 dimensions, right? One, earlier if you are filing ITR 1, now you have to file the ITR 2 if you have a foreign assets. So that's a that's the main change I would say. And so ITR 2 is required because the scheduled FA, which is foreign assets disclosure, is required. And again, not disclosing this foreign assets will lead to heavy penalties and so on. So it becomes more important that if you are venturing into this direction, going and trying to buy Nasdaq 100, what are the ways I was saying are your own way, right? So need to ensure that we go and use appropriate ITR once. In this case, ITR 2 we have to use, and there are two sections in ITR 2. One is this schedule FA where we can go and add details about the foreign assets we are holding, and what essentially what is the ETF we are holding and so on, right? And then there's a foreign income. If you go and sell some of these ETF units later, and there's the income coming out of that sale, right? So you have to go and calculate that, convert that USD to INR. Uh, so it's a bit more involved there, right? So you have to take the reference RBI data and compare the prices and the cost of buying and selling and so on, and say what is the income we derive from that particular assets. And then we have to report them as income, and there's the various taxation apply based on what asset class it is and so on. So yeah, so when we go and sell them at later point in time, we have to go and fill up this foreign income related sections in this tier 2 asset. Essentially this is much more paperwork than buying a mutual fund. Mutual fund is a few click away, right? You don't have to worry about or like not know about anything, right? When I bought those two mutual fund, what I showed, one from Kotak and another from ICICI. So I didn't know one was holding ETF based underlying asset and other was holding the direct stock. But I've seen that, but I don't at that point know the significance of it, right? Holding a direct stocks will incur more dividend distribution related charges, whereas the ones if you are holding via ETF coming from Ireland domicile, right? So it will be differently taxed. So essentially the mutual fund route, if it's available today, I don't know whether I will switch back. I have to see how their numbers are matching across these foreign tracked ETFs. If Indian mutual funds are also better or similar, I can easily switch back to the ones not go through this long like hop over multiple countries and buy the stock, right? It would be simply just buy mutual fund units in India. But at this point, it's not available. So this currently I'm going over all these hops and getting the buying the ETFs to get the benefits out of it, right? The growth, what the underlying companies provides, and the journey, right? So here, if you see the main, there are 2-3 parts which is more work compared to mutual fund. One, if you are doing ITR 1, you have to switch to ITR 2. But if you are already doing ITR 2, you have to add anyway. You have to go and add this schedule FA and schedule FSI related information. That is some additional work, and obviously you have to convert the money from US INR to USD and go and buy the ETF and so on. If it's a Mutual fund, NAV is fixed. You go on next day, whatever the date you are getting allocated, you get allocated to the previous date's NAV, and we get the units allocated to the account without any flex. But ETF will be again traded in stock exchange. It will go above the underlying asset value, or it can go below the underlying asset value as well. So yeah, those are the differences. And yeah, so the investments disclaimer, I'm putting it out, right, just to be so any investment, right, financial markets involve risk, and there's a possible loss of principal as well. So you need to be careful at understand what you are doing and so on. And past performance is definitely not a indicative for future results. So never go by that guarantee. Right? Also, whatever I shared here is it's more like explaining my experience and how I went about, and what is the approach I ended up doing to buy this top US tech companies, right? So don't treat this as a, let's say, financial advice, consult like qualified financial advisor before making any investment decisions, say. And yeah, so it's a viewer's responsibility, right? So it's not um, so you need to be responsible of what you are doing on it. And as with any investment, you have to go and comply with all the applicable laws and regulations in India, right? So that's all I want to wrap up with. Thank you for watching my first video.